You just had your best year ever financially, and the government is about to take a bigger slice than you ever imagined. Let's talk about how to keep more of what you earned legally, strategically, and without losing sleep. When your income spikes, you don't just pay more taxes, you get pushed into a higher bracket, which means every dollar above certain thresholds gets taxed at rates that can hit 37% or more at the federal level. Think of it like a staircase, where the top steps are slippery and the IRS is standing right there with a dustpan. The first thing you need to understand is that high-earning years are actually opportunities disguised as problems. The same year you earn the most is the year you have the most tools available to legally reduce what you owe. One of the most powerful moves is maxing out every tax advantage account you have access to. Your 401k, your HSA, your SEP IRA if you're self-employed. In 2024, you could contribute up to $23,000 to a 401k alone, and that money comes straight off your taxable income before the IRS ever sees it. If you run any kind of business, even a side hustle, the tax code is practically a love letter written to you. Business deductions for home office space, equipment, travel, software, and even a portion of your phone bill can meaningfully reduce your net taxable income. Here's where people get tripped up though. They confuse gross income with what they'll actually be taxed on, and they panic unnecessarily. Your adjusted gross income after deductions, retirement contributions, and business expenses can look dramatically different from that number at the top of your pay stub. Tax loss harvesting is another tactic that sounds intimidating, but is really just portfolio housekeeping with a financial upside. If you have investments sitting at a loss, selling them strategically before year-end can offset capital gains you've realized elsewhere, reducing your overall tax bill dollar for dollar. Charitable giving in a high-income year is underrated as a tax strategy, and we're not talking about just writing a small check. Donor-advised funds let you make a large deductible contribution now, take the tax benefit immediately, and then distribute the money to charities over several years on your own timeline. Timing income and expenses is one of the oldest plays in the book, and it still works beautifully. If you can defer a bonus into the following year or accelerate deductible expenses into the current year, you can smooth out your tax burden across multiple years rather than getting crushed in one. Real estate is where things get genuinely interesting because depreciation is one of the few legal ways to show a loss on paper while actually building wealth. If you own rental property, that depreciation deduction runs quietly in the background, shielding a portion of your income every single year. People assume these strategies are only for the ultra-wealthy with armies of accountants, and that's one of the most expensive myths in personal finance. A good CPA who specializes in high-income earners often pays for themselves 10 times over in the first year alone. The mistake most people make is waiting until April to think about taxes. By then, the game is largely over, and you're just filling out the scorecard. Tax planning is a year-round discipline, not a one-week sprint before the filing deadline. Here's the philosophical truth at the center of all of this. Paying taxes is not the enemy paying more than you legally owe because you didn't plan is. Discipline, preparation, and the right team around you are the only things standing between your best year and an unnecessarily painful tax bill. We're comfortable saying out loud that none of this requires exotic schemes or gray area maneuvers, just knowledge, timing, and consistency applied year after year. The people who win at this aren't geniuses. They're just organized, and they started earlier than everyone else. If you're ready to put a real strategy behind your earnings this year, check out our links in the description below. Whether you're looking at real estate investing, home contracting, work, or connecting with the right lenders, we can help you get started.